Can you hear me decently?
Yes, I can very well.
Okay, perfect.
Ja. Dus ja, het is nu eigenlijk...
Vic, your mic is on.
Okay.
I'm gonna ask Herring to unmute. Okay, cool. Well, we got 3 that can talk. That's all I wanted. All right, so I'm recording this, so nobody use anything personal or confidential that you don't want other people to hear when you're speaking. Sharing my screen to my TradingView chart. Can everybody see my screen?
Yes, we do.
Okay, Mike's joining now, so I'm gonna wait for him to join. That's crazy. We got 6 people in here in like 2 minutes flat. That's awesome. Good hustle, guys. Okay, so Mike's entered. He's probably just gonna listen. We have enough people that will be able to ask questions. This video is intended for everybody, especially the people that aren't very comfortable placing stop losses. So if you have any questions at all, go ahead and interrupt me. Just, you know, I think you can raise your hand. I think that's a feature. I don't know if I'll see it, but if not, just interrupt me. So you are going to want to use the average true range indicator. It is available on TradingView for free. You don't need premium subscription for it. You just click indicator and type in average true range. And there it is. Once that loads, I'm going to hide all these other indicators so it doesn't confuse you. So now we have everything cleared and just the ATR, the average true range indicator. And this is calculating the average candle size of that time. So when we were more volatile, this was the average candle size. Now we're kind of reducing volatility. The candle size is shrinking. There's quite a few things I could tell you about the ATR. It measures volatility. So the higher the volatility, the more likely the trend is to continue. See how there's high volatility and then it dipped and then continued up anyway? That's very typical. Here's an example of where it didn't hold true. So you don't want to trade off of just the ATR. But for stop losses, it does work very well. Depending on where you are trading, it could work better or worse. So for the instance of my BNB call that I made today, I did not calculate the ATR rule and put it into play. So that was kind of my fault. But now you guys are going to be able to be a little bit more responsible and you won't need my stop losses by the time you're done with this video. So I called out to average into a BNB long down to this area. I said stop loss 40.49 if I recall correctly. And I called that out, I don't know, somewhere around here. I don't know where it was, sometime in the early morning. So if I say buy BNB averaging down, most of you probably know that means you want levels going down to your stop loss like this to the point where your stop loss is at, and this call was 40.49. And so as you can also see, it stopped us out just by like 5-10 cents. That's normal. When the trend is undecided, people have their stops really tight. And then they say trading is hard because their stop loss was hunted and then it went up without them. The stop loss wasn't hunted. Everybody and their mom knows where your stop loss is because you're buying the trend. And that's why I don't tell people to buy the trend. That's why that signal wasn't involving buying the trend. It was based solely off of volume. Look how bullish this volume profile is yesterday. Or actually that was 2 days ago. That's a very bullish pattern. Anyway, this is the point of control from the day before and the point of control from the day after. The point of control in an uptrend tends to be the support, and the point of control in a downtrend tends to be the resistance. So in this case, there's 2 point of controls of this level. So I was telling you guys to average in from this level. So now comes the ATR rule. So if you think naturally, for whatever reason, I'm gonna erase everything and connect this lower point of control right there at 1051. So I gave that stop loss at 1049. But let's just say that I wanted you to average in from 4051. So I'm gonna make that bigger so everybody can see it. And that's a red because that would be your sell signal to get out of the trade. So now comes the ATR rule. I'm gonna pull up the ATR. And we can see that, oh, it's already up. We can see that at this trend point, the ATR was roughly 40 cents. Can everybody see this number down here?
Yep, we do.
Okay. Fatima is joining. One moment while she joins. Welcome, Fatima. This is going to be recorded, so I'm not going to repeat myself, but you can watch it after it's done. And otherwise, if you have questions, you can still ask. But anyway, so we are averaging into a stop loss of, or averaging into a buy zone of around 40.50. And the ATR is roughly 40 cents at this level. So with the ATR rule for calculating stop losses, it varies depending on who you ask, but my rule is 1.3x the ATR. So does anybody have a calculator handy? You want to enter 40 cents, which would be 0.4, and multiply it by 1.3. And what is the result? Well, 1.2 would be 0.5, so it'd be a little bit greater than 0.5. I'll do it since nobody else is doing it. 0.4.
November was echt
0.52.
Yep, 0.52. So if you want to give up buying it at this level and you don't want your stop loss to get rocked like it did today. Oh, Kryptonite's coming too. Oh, that's crazy. You have 8 people in here. It's a great time to do a class, apparently. Welcome, Kryptonite. I'm not going to repeat myself, but the video is being recorded, so you will be able to catch everything still. So this is our buy level, and the ATR is at 0.4, and 1.3 of that is 0.52, as somebody kindly calculated. So if we want to stop buying here, all we have to do is subtract for long. We want to subtract the current price, I mean, the calculated ATR, 1.3, which is 0.52. You want to subtract that from the price you want to give up buying at. And so 0.52 from this price is 40 even. So according to the ATR rule, you would not get stopped out until 40 even. And I'm going to make this black. And here you go. So you bought where I told you to buy in this range, and bought more and more the lower it went. And then here you stopped buying. And with the ATR rule that I just taught you, you would have stayed in the trade until it broke below that line by 1.3x of the ATR, which is 30% greater than the ATR. And the ATR was 40. So 0.52 was 30% greater, and that would have been right here. And so your stop loss would not have been hunted. Yes, Vic, you have a question?
Yes, what time are you looking to this?
This strategy applies to all time frames. It even applies to the 1 minute.
Yeah, no, that was not the question. I mean, when are you looking at the ATR? When you're placing your trades, or
whatever time frame you're trading, you can look at the ATR for that time frame. So my signal is the silver tier, the common signal tier. That's typically based on the 30-minute time frame. So in this case, we are looking at the 30-minute time frame. But again, this rule applies to all time frames, from the minute to the daily. So you can take this knowledge and apply it for all of your trades, and you'll be amazed how well it works at preventing your stops from being hunted. And it's that simple. That's the end of the lesson, really. You figure out where you don't want to buy it anymore and where most people are going to put their stops, and you calculate 1.3x of the ATR, and you have it. And that would have been right here, and it wouldn't have stopped you out. And if you know the level of stop loss that won't shake you out unless it's really done is down here. Where would you want to average into? Even lower. And then you would have been sitting pretty buying everybody's stop losses and made even more money. Does anybody else have a question before I give a final example and wrap this video up? Okay, cool. A final example. The first person to use their voice to say a coin is where we're gonna go next. What's the next coin that we're gonna check out?
Theta.
Theta. All right, let's figure out a good stop loss for Theta. All right, so here
What
we
a
have,
surprise.
what's the price?
No, I said, what a surprise.
Oh, what a surprise. Yeah, everybody loves Theta. All right, so first we're gonna identify a trend that everybody and their mom can see. Does everybody see it? It's right here. See how that's a trend? Everybody saw that? Okay, so you would have bought the trend because the trend is your friend until the end, right? Well, let's say that you actually wanted to trade off the trend because you didn't have me to tell you what to buy and what not to buy. And you had to buy this, you had to buy this trend. You're gonna pull up the ATR indicator and figure out what the ATR is for this trend. And depending on where it touched, the ATR was up to 0.033. So you're gonna pull out your handy dandy calculator and do 0.033 multiplied by 1.3. The answer is 0.0429. Let's just round up to an even 0.043. And we are going to measure or subtract from whatever the current price is. So if you were buying here and the trend is here at 0.94, at 1.94. So we're going to do 1.94 minus the ATR result, which was 0.043. Because remember, the ATR is 0.33 and we multiplied it by 1.3 to get 0.043. So we're going to take the price that everybody's buying at 1.94 and subtract the calculated ATR rule, which is 0.043, and that comes to 189.7. So you can see here that 189.7 stopped out too. So if it's stopping out people by more than 1.3x of the ATR, it's very unlikely to go to new highs. If it stopped out by less than 1.3 XDR, it's actually more likely to go to new highs, because if people are getting stopped out, they're selling low, but they still like Theta, don't they? So they're going to be buying high, and they'll be buying up here, which will cause FOMO and bring it back up to new highs. But the fact that our stop loss that's supposed to be unshakable still got stopped out, that's it. There's no more to this trade. You got stopped out. You don't want to relong it. I'm not saying short it either, but this broke your 1.3x ATR. So this is not a normal shakeout. This isn't a stop hunt. The stop hunt was right here, and it actually reversed right at that point of control of today's session. That's very normal. Remember what I said in about 10 minutes ago, that the point of control tends to be resistance or support depending on where the price is at. So in this case, the point of control is above the price and it resisted it. So that was your first hint that, this is different. But anyway, if this were to hunt your stops, it would have rallied from there and maybe diverged there, or it could have went to new highs first. But the fact that it resisted that point of control, resisted this trend line, that became bearish right here. So it's not that surprising that we got stopped out. But typically, if the trend is to continue, it will not break the 1.3x ATR level. I'd like to find one that didn't break. Let's go to Bitcoin. We're going to scroll back a little bit to a different area. Here we go. We're going to say, that might not be a good, let's see, it's 1,000, so 1,300. That's the trend. Yeah, perfect. Okay, cool. So we have this trend that everybody and their mom can see. And it looks like this in the moment because we're doing this hypothetical. Connecting these lows, connect that low. All right, so everybody knows that this is a trend. You don't even have to be a technical analyst and you can see this trend. That's how you know everybody can see it. You don't have to even know what you're looking at and you see that there's trending support. And everybody sees that it touched here and ran again. It touched here and ran again. Well, actually that kind of broke it, but it didn't break the 1.3x ATR. So you could connect this to a different point. We could say, let me move this to be there, and then I'll move this to be here. There's an attacked trend. Okay, so we saw that it hit it here, bounced, hit it here, bounced, hit it here, bounced. So at this point, if you want to buy this trend line and you don't want to be stopped out before it goes up again, you're going to pull up the handy dandy ATR and see what the ATR is on this trend line. It's anywhere from 500 to 700. And right here, when it really dipped and then rallied again, it was 900. And it respected the trend, didn't it, guys? So if 900 is the ATR for this trend, you would multiply 900 by 1.3. And the answer to that is 1170. Let's just round up to 1200, so it's easy math for us. If we are buying, I'm gonna signal it. Say we're trying to buy at this price right here, because you know the price moves as the trend continues. That price is 36800. That's $36,800. And remember, the calculation was a 900 ATR multiplied by 1.3, and that came to 1170. I'm just rounding up to 1200. So you would take this price of 36.9 and minus your ATR calculation of 1170, or if you're rounding up, 1200, and it comes to 3573. So you go to your chart and find 3573. It's right here. So if you're buying this trend, don't put your stop loss right there. That's where every idiot has theirs. So let's see what happens. Boom. Stopped out every idiot. Didn't stop you out because Beluga taught you how to not get stopped out. Any questions before I end this video? Somebody's typing. Let me see what they're saying. But if you average it below support, it might head down more. No, not catching a falling knife. So it's not a falling knife if it's just bleeding. You could call it a bleeding trend. A falling knife is something daggering. It's sharp. The difference is you're counter trending. You're counter trading the trend. So most people are anticipating this to be support and they're selling when it breaks. You want to buy at oversold conditions. Oversold conditions were right here. And with my ATR rule, you would not have been stopped out of this trade and you would have made a lot of money. And you could have used the ATR rule again here and not been stopped out of that one. So you can still buy this trend, guys. I don't tell people to because most people don't know about the ATR rule. But if you know about this rule that I just taught you, you can buy these stupid trends that everybody else is buying. And they continue because people get stopped out and they buy higher. And then they probably get stopped out again and then they buy higher. And they get stopped out again and they buy higher and they buy higher and then they give up selling and then they get stopped out again. And that's all it is. Why did I decide to take 900 from ATR? I didn't decide. The ATR was given to us. So the ATR on this trend is 900. So I took 900 and I multiplied it by 1.3, which makes it 30% greater. And that's where we got the 1200 amount. And this is based on the premise that trends continue so long as they respect the average true range. And we give it 30% wiggle room of that average true range to account for any potential, hiccups and slippage and stuff like that. And bots will trade this. They'll trade based off of the average true range sometimes, and they're catching those dips that idiots sell. And now with this rule, you guys can trade the trend a little bit more confidently. You're just going to want to average in from 1.3x ATR below the trend, or if you're shorting, average in from 1.3x ATR above the trend. And that question that I just got on the chat, Kryptonite was asking, but if you're averaging below the support, it might head down more. No. You're averaging in, and so your point of maximum risk is still at your stop loss. You're not taking any more risk by averaging in from 1.3x ATR. And it's that simple. So you're averaging in just like I taught you. You're just doing it from 1.3x ATR away. And it ensures that if you get stopped out, the trend has probably reversed and it's not going to be the same anymore. But if it doesn't stop out 1.3x away, then it's probably going to continue. Does anybody have any questions before I end the chat? So can average extra low using this? I wouldn't call it extra low. I would call it low enough. And this holds true really well when you're trading trends that everybody can see. If you're trading my zones, you don't typically need to do this. That's why I haven't made a video about it sooner. But if you're trading like an idiot, like a degen, then you need to use this rule and it'll really help you. And you're welcome.
Me too.
You're just counter trend trading. Everybody and their mom is freaking out when this breaks. You open your bags and you buy it. You anticipate the breaking of the trend and you buy more up until 1.3x ATR. And every time it breaks it by less than 1.3x ATR, you would be in profit again. See that? Broke it by less than, didn't get stopped out. You can buy this trend and not get stopped out. It's a wonderful thing. So what do you think is going to happen when this trend breaks by more than 1.3x of the ATR? Still didn't break by 1.3x. Still didn't break by 1.3x. Maybe here, let's see, the ATR is 500, so maybe 700 would be it. So if the trend was here, there, it finally broke by 1.3x the ATR or more. Look how much it fell. Oh my God. You guys just got an amazing class. Thank me later. Any questions before I get off of this? Any questions at all? I don't care if it's stupid or if you think I already answered it, just ask it. Somebody ask a question. There's 10 of you guys in here. When is next class? Hey, Sanji. I don't know if I can teach basic stuff, I'm happy to. I just don't want to give my best info away to everybody because that will reduce the alpha for everyone else. It'll reduce our profitability and everything. I didn't know you could send files in the chat, Mike. That's kind of cool. I don't know why I'm downloading this right now on a recording. Looking at his photo that he just sent. Anybody think of any questions? Oh, he just showed me a spreadsheet. Okay. All right. So so far only one person has asked a critical question, and that was Kryptonite. Does anybody else have a question that you think that I sound stupid and you want me to clarify? I'm happy to. That's what this is for. Does anybody have a confusion? No, we're all idiots. I love being a retard. What was that 1.3 XPR you were talking about, Sanji? I'm talking about the ATR. It stands for the average true range. It calculates the average candle size. And then 30% greater than that is a good wiggle room for trend trading. So you take the ATR and multiply it by 1.3 and then put your stop loss beneath the trend by that amount. Yeah, stopping at support. Yeah, exactly. You guys before this video were selling at the best time to buy. And now you guys can buy at the best time and still respect that trend. This applies to everything, stocks, crypto, gold, whatever. How do you get the number for the ATR? You click indicators and type in ATR and then enter and click it. And then the ATR will show up down here. And to the right here, it gives you the value of the ATR. And that's it. 1.3x away of the ATR. If it breaks that, the trend's probably over. You can see that it minded that ATR rule from 32K all the way up to 39K. And then that ended up being the top. It diverged at the old support line. That support line became resistance. And that resistance level ended up being where I called out to short if it resisted. And so if you were following my BTC analysis channel, you would have entered a short right there or right here. And you guys know what happened. Went down and down and down. Still going down. All because this trend broke by more than 1.3x the ATR. All right, this video is running much longer than I thought it would, but okay. Is it the average number of air x 1.3? Yes, the ATR is the average true range. That is the average. And then you multiply it by 1.3 to get the range that you don't want to get stopped out by. You take the value, which, you know, at any given point changes. So if you're on this trend, the value right now is 600 at this price. Multiply by 1.3. Put your stop loss 1.3x of the ATR away. And then when you finally get stopped out, don't buy back in because it's probably the end, and it was. And then the next question was, why don't people stop hunt? I mean, there has to be more people who know this. You mean, why don't people stop hunt with this rule? Because it's too hard, it's too expensive. There's too many strong trading. There's too many strong traders trading this. They know about the ATR. They know that stops get hunted. They know that people get shaken out. So they have their own idea of how far down to tolerate a trend break. So it might be 1.3x for them. It might be 1.2x. Who knows? Maybe it's a really volatile one and it's 2.2x. But on the high volume stuff, like Bitcoin and Ethereum and Theta and all that, typically 1.3x is going to be enough for you guys. But no, it's not about the patience, Herring. It's about the money. So it's too cheap and too tempting to shake people out right next to the trend. And the big buys come out right underneath the trend because they're not idiots. The bots will come out too. They chase moving averages, they chase all that stuff. And the bots will support that trend for you. You want to buy with the smart people, which is within 1.3x ATR of the trend break. Yes, it depends on current price. The ATR changes based on the current price. So wherever your trend line is drawn, take the ATR value for that. There are not many people who know this, Herring. Trust me on that. Yeah, if you Google how to not get stopped out, you could probably find this. It's not a super secret. That's why I'm giving it to you guys. But it's very handy. It'll save your life more times than one. You know, you could just tolerate 1.3x extra risk of the ATR, but you guys know how to DCA. So I want you guys to DCA up to 1.3x the ATR away from the trend. And the signals that I give you on the gold tier, the gold signals, you don't need to do this at all. If you were to do this, do it by like 1 ATR. So if the ATR is 100, then allow 100 wiggle room. That's it. But with normal trends that the idiots are trading because they don't have good signals like you guys do, then use this rule, 1.3x. And if it's more volatile or lower volume, then use a higher multiplication rate. Yes, Kryptonite, this means you can trade anytime. You can draw a trend line that everybody and their mom can see, so long as it's on a high enough time frame that smart money's trading it, and it's not like by robots, so like 30-minute and greater. Draw those trend lines. Average in from 1.3x ATR away. Don't even buy the trend at the line. Only buy beneath it by 1.3x ATR, and you will get some awesome entries. Or vice versa, if you're trying to short, only short above new highs by 1.3x ATR or less, and you'll get some awesome short entries. How did you find this 1.3 ratio? Studies, chance, teacher? I'm pretty sure I Googled it. I think I Googled it back in 2016, 2017, and I did some back testing and I realized that it works really well, and I've been using it ever since. But I don't trend trade, so I very rarely use this. Trading the trend is a good way to lose money if you're trading with a lot of money. If you're just trading with 500 bucks, $1,000 you're not going to be hunted. They won't even see you in the order flow. But if you throw on $10 million on the trend, it's going to break. And you don't want to get stopped out. Just average in 1.3x away from the trend. And you guys will only get stopped out when the trend is over. Yes, the golden tier signals do not need to be calculated with this rule. 1 pip below is typically enough. If you want to be extra safe, you can average in by an extra ATR. So if the ATR in that zone that I give you is, 10, then you can allow 10 wiggle room. You don't need to do 1.3. I mean, no, you really should never have to do any wiggle room on the gold tier. You'll probably never even get entirely filled. That's the point, is it's very low risk. So you don't really need to allow any extra risk, or more importantly, you don't have to average in below the zone that I give you. On the silver tier, this really applies. And point in case was the first example I gave. And if you missed it, this video is going to be recorded and you can see it later on the BNB call. It was a flawless call. I just gave you guys the wrong stop loss because I was on my phone and didn't calculate 1.3x the ATR. Again, here's this call. I told you guys to buy. I told you guys to buy down to this range. And if you would have looked up the ATR, it was around 0.38. You multiply that by 1.3, and you would have not been stopped out, and you'd be sitting in a lot of profit right now. You'd say, Beluga, you're the best. I love your signals. Thank you for teaching me trading. I'm going to stay subscribed forever just because I love you. Thank you for the kind words, Sanji. Thank you for the gratitude, Herring. Thanks for the thanks, Kryptonite. Okay, so you have, may as well just finish out this 40-minute session. Maybe pin the silver signal. Yeah, I'm going to pin this video. I'm going to pin it in the premium chat. And I can pin it in the silver signals as well. Great, I'm glad you enjoyed it, Dennis. I'm glad you found it informative. In the public chat just yesterday, somebody was expressing interest in my signals. And they said, I don't want to just blindly follow. I want to understand. And I told them, I was like, I explained to my subscribers, why I do the things I do and how I do it. And he probably didn't believe me. I don't know. But you guys can hop in the public chat and say, thanks for the great lesson, guys. It really helped me. And let people know that I'm actually not scamming. I'm not pump and dumping on you guys. Yeah, the public chat had a lot of noise a couple weeks ago when all those mass ads were coming in, but there's way less noise now. It's pretty much just Sanji talking to himself and occasionally random people asking questions. But I would really appreciate it if you would leave a testimonial in the public chat, because that's how my business grows. All right, so we have 5 minutes left. It doesn't seem like there's any more questions about the ATR. You guys are encouraged to go through whatever chart you want and pull up the ATR indicator and find the trends and calculate the ATR rule and see how much profit you could have made if you would have known this sooner, and start using it. Practice makes perfect. The more you do this math in your head, the more you calculate it out, the more you follow this indicator and draw your trends and see where it is, the more you're going to understand it and believe in it, and the more you'll be able to rely on it. And yeah, That's the how to not get stopped out unless the trend is over trick. Oh, I wish you would send me ganja. Okay, so I'm gonna hop on Bitcoin just to let you guys have a little insight into how I see things for the final 4 minutes of this. I was going through this with a VIP earlier, so it's fresh in my mind. What I see happening is probably at worst, it's going to go to new lows, which will scare longs into selling for a loss, and it will entice shorts to short. And so if the shorts are shorting, they're selling. And if the longs are closing their longs, they are selling too. If the majority of people are selling, who do you think is dumb enough to buy it? Who do you think's buying this? If everybody's selling, if the longs are selling and the shorts are selling, who's buying this? If 98% of people are selling this, who's buying it? Does anybody know? Somebody probably knows. Smart people are buying it. Yep, you guys are buying it. Good guess. The people that want a Lambo. The people that have Lambos, more likely. They're taking the other end of the trade. So this range to this range, where everybody's shorting and everybody's closing their longs, boom, up it goes. It's going to try to dip there. It's going to catch a higher low somewhere in this level, and then it's going to run again and hit the true resistance level that I've been calling out to you guys for, I think, like a week. And that's where we're actually, hopefully we hit this. If we hit this, then that resistance level is taken care of, and we can buy any dips confidently because it'll go to the moon afterwards. Because this is the only significant resistance on Bitcoin. So what we want to happen, to recap, we want idiots to close their longs. We want idiots to short the low, and we want the smart money to buy right here. And we want the idiots to probably add on shorts here and get squeezed. And then the FOMO gets so uncontrollable and then gets reversed somewhere in this area. And then we want to buy any new lows. So the new lows would be somewhere on this level. And then what's likely to happen is the dip is going to be canceled and up it goes. And what's cool is there's confluence in this idea. If you go to the weekly and you go to Bitstamp and you look back as far as you can, anytime it broke out from an all-time high, it ran, and you can see from the high, it fell 40% after it ran. Now let's do that again. Here's the high. And there's the new high. 40% is right here in Beluga's green zone, around 25, 24, 26K, which is a flawless confluence of indication. So that's what we're looking for, guys. We're looking for shorts to get greedy and open up a bunch, and longs to get scared and close a bunch. And that'll create textbook perfect oversold conditions for the market makers and the billionaires to take the other end of the trade. And it will bounce from the support zone, and it'll take out, hopefully it'll take out this resistance zone for us. And then it'll dip one more time and then fill our big buys. I signaled out where to buy this in the gold tier section. And then it'll go to the moon. And it'll run even harder than it did in December. It's going to run harder than this. You think this is a lot? It's not. You're going to see it get even sharper. It's going to run like that. But not until the shorts close. I mean, the shorts open and the longs close. And they have to take out the zone first. After that zone and we get a dip down to fresh level, it's going to moon.